All right, let's talk about what's going on in the markets. It feels like every time you turn around, there's another headline screaming about the end of the world. So much fear, so much noise. But today, we're going to cut right through that. We're going to look at what the data is actually telling us and try to find the real signal hiding in all that static.
It's a simple truth, right? Doom and gloom, it just gets clicks. And we've seen a ton of bearish commentary lately, all over social media, everywhere. But you have to remember, a lot of the time, this stuff is just noise. It's designed to play on our emotions, not to actually reflect what's happening with the market's fundamentals.
So how do you even begin to fight against that? Well, there's this really powerful idea called contrarian opinion theory, and the core of it is actually pretty simple. When the crowd is in a full-blown panic, that's often the moment of maximum opportunity. It's all about keeping your head, focusing on the real numbers, and not getting swept away by the narrative the masses are pushing. So here's our game plan. First, we're going to nail down what signal we should actually be listening for. Then we'll zoom out and look at a huge macro shift that's happening right now. We'll take that idea and apply it to Bitcoin and the S&P 500. Then we'll tackle the massive debate around AI, and we'll wrap it all up with a big question about the future. Okay, so if we're tuning out all those scary headlines, what should we be tuning into? Well, the analysis really just boils down to two key things. These two pillars right here give us a much clearer, less biased picture of what's going on. First, liquidity. Is money flowing into the system or is it being sucked out? And second, sentiment. What is the crowd actually feeling? Are they irrationally euphoric or are they terrified? You put those two together and they tell you a story that the headlines almost always miss. Now this is where it gets really interesting. Both of these pillars, liquidity and sentiment, are starting to point to a major shift. A shift that pretty much goes against the whole bearish story we've been hearing. Let's start with liquidity. So for a while, the US Treasury was basically pulling cash out of the system, and that was putting a lot of downward pressure on assets like Bitcoin. But just recently, that whole trend has done a complete 180. The Treasury has started injecting liquidity back in. Now, it's not a huge flood of cash just yet, but the key thing here is the direction. The trend has totally flipped from negative to positive. So, how much would it really take to move the needle? Well, the analysis suggests that an injection of over $100 billion could be enough to fuel a pretty strong rally in things like Bitcoin, the S&P, maybe even gold. We're not quite there yet, but the important thing is the tide has started to turn. And the other huge piece of this puzzle is interest rates. Not that long ago, the Fed was talking all tough. But now, officials are openly talking about cutting rates. And this isn't just talk. If you look at the bond market, the futures market, all the key indicators are now pricing in a very, very high chance of a rate cut happening soon. That's a total game changer. Okay, so let's recap. We've got a macro picture of rising liquidity and the market expecting rate cuts. So let's take that framework and apply it to an asset that's super sensitive to this stuff, Bitcoin. Remember that second pillar we talked about, mass sentiment? Well, right now, the crypto market is in a state of extreme fear, a score of just 20. And if you're a contrarian, this is exactly what you want to see. It's almost a necessary ingredient for a real market bottom. You need that widespread panic to flush out the last of the weak hands. And this chart, wow, this just paints that picture of panic perfectly. The spot Bitcoin ETFs just had a record-smashing trading day. A huge, massive spike in volume during a big downturn like this is a classic sign of what's called capitulation. It's that moment where the last sellers just throw in the towel, and that can create a solid floor for the price. And on top of that, we're seeing all these other classic signs that a bottom might be in. The wave of forced liquidations is over. Open interest, which is basically the number of open contracts, has flattened out. And funding rates for futures even went negative for a bit, which just means it got more expensive to be bullish than bearish. All of this points to the selling pressure just being completely exhausted. Okay, so that's Bitcoin. Let's shift gears and look at the broader stock market. Does this same contrarian logic hold up for the S&P 500? Because the disconnect here is just fascinating. This is the million-dollar question, isn't it? The index is right there, knocking on the door of a new all-time high, but you look at investor sentiment, and people are terrified. It just doesn't add up, and that kind of contradiction is exactly what a contrarian investor loves to see.
Just think about what a real market top usually looks like. It's formed in euphoria, right? Everyone's leveraged to the hilt, and they're all convinced the market can only go up. What we have right now is the complete opposite of that. The narrative is bearish, investors are scared, and people are paying up for defensive positions. This feels a lot more like a launch pad for the next move higher, not a ceiling.
Of course, we can't have a conversation about the market today without talking about the elephant in the room, artificial intelligence. I mean, is this incredible rally we're seeing just another tech bubble that's waiting to pop? You hear this argument all the time from the bears. They say, oh, this feels just like the year 2000. Look what happened to Cisco. But there is a massive, fundamental difference between that era and today that you absolutely have to understand. Here it is, right here. Back in the 2000s, companies like Cisco were selling connectivity. They were selling routers and switches. But the demand for that is ultimately finite. You only need to connect so many offices, right? What today's AI leaders are selling is intelligence itself, compute power. And the thing about intelligence is, the more you use it, the more of it you need. The demand is effectively infinite, and that creates a totally different economic reality. So all this brings us to the real-world impact of this incredible technological shift. Let's just zoom out from the market charts for a minute and think about the huge societal changes that AI is already causing. I mean, just look at this statistic. It's pretty staggering. In the United States, a full 1/4 of the total unemployed population are people with a 4-year university degree or more. These are the very jobs that are being directly impacted and, in some cases, automated by AI as we speak. And that kind of leads us to our final question for today. If all these traditional white-collar jobs are suddenly under threat, what's the path forward? Maybe the answer isn't to just go look for another job, but to actually use the incredible power of AI to create your own. Could it be that the future for the next generation isn't employment, but entrepreneurship? It's definitely something to think about. Thanks for tuning in.